What's going on, beautiful people? What's going on, beautiful people? It is a lovely day. It is a lovely day. Oof, I need better clarity on my video. I need better clarity on my video. What's happening, family? This is your guy, Mr. Holistic. It is officially Tuesday, February the 4th. 4 days into Black History Month. It is 4:02 on the West Coast, 7:02 on the East Coast. How you doing? How your mama doing? How your daddy doing? How your cousin doing? How your granny doing? How your best friend doing? What up, Keith? What up, Ollie? What up, Leslie? What up, Lady D? What up, Patrice? My guy. What up, King? What up, Twan? What up, family? What up, family? I'm gonna be playing with my settings today. I gotta figure out why we can't see this like we used to. I gotta figure it out. Why we can't see it like we used to. See it like we used to. What's happening, Crystal? What's happening, Andreen? Yes, let's get into it. Let's get into it. How y'all feeling this morning? Put some fire in the chat if you had an amazing day yesterday. Put some fire in the chat if you had an amazing day yesterday. Yes, what's happening? What up, Jen? Today is going to be an amazing class because today I know we have a lot of new people in our organization. We also have a lot of new people watching. So a lot of people are literally jumping in discords. A lot of people are not getting educated. A lot of people are just like trying to earn before learning, and that never works out properly. So let's be honest. Like the minute you put, I would say, money over your education in this financial space, what you're going to learn is a very hard lesson. The minute you put education over earning, your earning always exceeds the efforts that you give in learning what you're trying to make money on. Because never in the history that you can literally, besides something illegal, where you can just flip money and not really know the numbers, not how much this cost. You just put your price on it and move it. Basics to basics. I made 29.7% yesterday. Let's go, Sean. Let's go. What's good, fam? What up, Ryan? How we haven't met yet, Ryan? What up, Trace? What's happening? If you are in this live, make sure you hit that notification. Make sure you subscribe. Also, make sure you like the channel. Make sure you like the live. There's a thumbs up. Click that thumbs up to show me that you're participating in this live, and we're going to keep it pushing from there. And now I also kind of like see why my stuff is messed up also, because I used to be able to see the stats of the live, and now I can't see the stats of the live. So we're going to have to reboot the whole app, the whole software when I get off, which is going to change all my settings again, like how when we first got here. Brody, y'all know income claims, but my guy Devontae had a hell of a trading day yesterday. Congratulations, Brody. Congratulations, Brody, on your first 5-figure day. Well, yeah, 4-figure day. 4-figure day. Let's go. It's amazing. It's an amazing feeling. It's an amazing feeling to take it, to make it, and then make it real. So I don't know about you guys, but I don't know why a lot of you guys have not made it real yet. Meaning, why have you not withdrawn? Why have you not pulled money out the market? So today what we're going to be talking about is like how to take a signal, how to read a signal, how to understand a signal, how to literally interact. Because a lot of you guys get so caught up in literally like watching videos and then you miss the actual action because You can only learn so much from watching videos. Most people learn more efficient by literally participating live. Put some fire in the chat. Put some fire in the chat. Yeah, my guy made 29% yesterday. Nowhere in the history of the world right now, in the crazy economy that we're in, that you can get a 29% return in one day. Like nowhere. This is real deal. There's nowhere you can go right now. We have Eliana. There's nowhere you can go right now and get a 200% return. Like there's nowhere. And I don't care if it takes you 5 months, 6 months, 8 months. Nowhere you're gonna go get a 200% return. Let me tell you, bots that are trading, bots are not giving back 200% return. I'm just telling y'all. So let's get into it. Because a lot of you guys are missing action. So what is a signal? What is a signal? A signal is a zone that a proven trader or an educator will literally analyze in the market, and then they will give you. First thing you should know, indices zones are like 300 pip zones. Metals like gold, silver, these are always going to be like 30 pip zones. These are always going to be like 30 pip zones. What is a 30 pip zone? We just did calculations yesterday. Meaning, if I want to say the price of gold right now is $2,815. 30 pips from that is $2,812. Type a 1 in the chat if you understand. Type a 2 in the chat if I need to repeat. 30 pips. What is 30 pips? How do you calculate 30 pips? You calculate it by the decimals right there at the end. 2815, 2,815. So if it goes to 2,812, that is 30 pips. So when someone gives you a zone, let me just show you. I'm just going to mark it out right here. If someone gives you a zone, a 30 pip zone. So watch this. Let's go from 2824 to 2823. Let's go 2822 to 2825. Right here. This is a 30 pip zone. Put some fire in the chat. We're going to do a sell zone and we're going to do a buy zone. So you got 2781 to 27. Let's bring it back up. 2778. Put some 8s in the chat if you can see it. Put some 8s in the chat if you understand. Put some 8s in the chat if you understand. So our buy zone is 2781 to 2778. That's a 30 pip zone. Anytime you have a buy zone, it's going to be at the bottom of the candle structure. So you see the candles over here? Put some 8s in the chat. You see the candles over here? That means I'll scoot it over. These are not actual zones. These are literally me just teaching you. So we're just gonna just bring it over like that. Actually, we're gonna bring it down because that's more profitable. So we got that zone is 2778 to 2775. We're gonna go right. We're gonna go up here. And we're gonna go 2830 to 2827. Just like that. Boom. So now it's in action. So if this particular candle comes up to this area right here, what we're waiting for, let me show you how you take the signal. You have an aggressive, what the fuck? You have an aggressive entry, which is always going to be your first entry. So if we're looking at a, 2830 to a 2827, your aggressive would be 2827. What is an aggressive entry? What is an aggressive entry? An aggressive entry meaning if the market immediately comes to the first point of the zone and you are wanting to take the first aggressive entry, meaning the first time it touched that zone, you are trying to sell her. So that means you're taking this entry. The modest entry would be the 2830, which is the back of the 30 pip zone. Put some fire in the chat if you understand. Put some fire in the chat if you understand. Yeah. Put some fire in the chat if you understand. Let me say that again. When you get a zone, a signal, you're going to have an aggressive and you're going to have a modest. Crystal, you understand that? The aggressive is if you have a healthy account, if you have some house money. The aggressive is something that you can attempt to literally participate in if you are profitable already or for sure are having house money, non-emotional attached money in your account. The aggressive is recommended. If you have a very small account and you're very new at trading, your straight to your process should be, I'm going to take the safer trade. The modest is always the safer trade. And never feel like, oh, I missed. Do you know how many trades I would miss at the aggressive entry before the simple fact I'm protecting my baby, which is my account. I'm not going to put my baby in an aggressive situation if my account can't handle it. Put some H's in the chat if you understand that. Can you liken the modest as safest? Andrine, are you speaking Ebonics to me early in the morning? Can you be liking the modest as the safest? Yes. I like middle to modest. So let's make a bigger zone right here over to the side so I can show you guys. So what I'm going to do is draw a highlight in the middle that represents this buy zone, sell zone, and then this buy zone. So if you guys understand it, so you can see it. All right, I want you guys to see it. So if you take the aggressive, you should never go all in on your first trade. So let's do some real teaching. Yo, I think my my keyboard just died. My keyboard just died on us. Thank God for plugs. Thank God for plugs. There we go. Boom. Put it right there. Boom. This is modest. Boom. So we got aggressive and we got modest right here. Put some fire in the chat if you can see it. We're going to make it big so everybody can see it. We're going to make it big so nobody has any excuses. No excuses. Boom. So here we go. Now we're in there. Now we in there like swimwear. So here we go. So if the candles pull into your aggressive and you have a $500 account, I would never advise going in for the full lot size that your account can hold on your aggressive. Put some ones in the chat if you understand that. Because if you put, say, a 0.25 right here, which is what I recommend the max you use on a $500 account, which is like extreme. If you go in right here for a 0.25, you're going to blow your shit most of the time. Because it'll pull up at least to the middle to the modest in these particular zones. If you come in right here for the full 0.25, 25 cents, you're going to blow your shit. Because if you have $500, by the time you're 20 pips into the zone, you're already going to be $50 negative. And that's already too much of a loss on a $500 account. Somebody tell me, what is the percentage of $50 on a $500 account? So that means by the time it gets to the modest, you're already negative $75. That is a very bad trade management strategy to be in before you take another entry. So let me show you guys. If I had a $500 account, the max you're going to see me use is probably a 0.15. Probably a 0.15. So how I would do it, I personally, very seldomly do I take aggressive. But let's say this particular trade, you have an aggressive and then you have a modest. I will come in right here at my at my aggressive, and I would open, let me show you, a 0.05. Right here at the aggressive. Put some fire in the chat if you see it. I would open a 0.05 right here. Booyah. At my aggressive entry, I would have a 0.05. So at, say, 2800, let's say it's right here at 2800. As soon as it hit 2800, I press the sell button. Bang, I press the sell button with 0.05. If she keeps pulling up, now we're like 10 pips negative. That means I'm only down $5. If I want to take another entry, you will hear me say, I like to set my alarms middle to modest. Boom. I personally will set my alarm. If this was a signal, I would set my initial alarm right here. If I personally miss anything here, I don't care. Because 9 out of 10, it's going to come back and retrace over here to middle to modest. So the safer way to trade a small account, I always start middle to modest. But what we're talking about is how you take aggressive and then take another entry at modest. So watch this, beautiful people. I am only willing to use 0.15, meaning 15 cents from the aggressive to the modest. What that means is my first entry is a 0.05. As it pulls into that 30 pip zone, I'm only negative $15. The minute it hits my modest, guess what lot size I'm going to use? By the way, you see in the chat that $50 of a $500 account, that is 10% of your account. You should never be risking more than 1 to 2% of your account in a trade. So imagine in one trade you risk 10%. Where do you go from there? When that's like 3 days of loss. You see, that's 3-4 days of loss right there. So when you think percentage versus money, you start going, wow. That $7, that $8, that's 3%. That's 9% of this 500. I'm like, shit, how much can you lose? So when I get to my modest, since I only want to use 0.15, now I know I have an entry of 0.5. There you go, Garrett. There you go, Lady D. So my next entry at my modest is going to be a 0.10. Boom. That would be my modest entry. So now as this trade starts pulling out and maturing, I am negative $15 right here. The minute it hits the modest and drops just literally 10 pips, I'm only negative $5 now. The minute it goes 20 pips into the zone, I'm up $10 now. The minute it comes back into my aggressive entry, I am positive $30 and maybe negative, maybe like 25 cents right now. The minute the trade passes with my aggressive, I close that 0.05. Now I have a 0.10. I close my aggressive in like bare minimum profits. And then I ride this, and then I immediately start taking my stop loss as it passes through aggressive, and I sit it middle to modest. Boom. Put some 8s in the chat if you understand how to take a sell signal right now. Put some 8s in the chat if you understand how to take a sell signal right now. Let's go. Let's go. So the key into literally doing this, so let me show you again. Let me show you again. The key, so imagine me as a proven trader, as an individual that gets on here and educates you guys daily, Monday through Thursday. I educate you guys daily. The key to understanding the middle to modest, like I like to take the middle to modest. Why? Because that allows a trade to breathe. It doesn't allow me to start making assumptions. Like, we can assume all day. I can assume if I have wick rejection that she's going to go back to my buy zone. But if you see a big green candle coming into your sell zone, you're needing wick rejection. You need the market to come out of there, start breaking out. Wick rejection, wick rejection, wick rejection, wick rejection. You need that to happen to start saying, yo, this zone is proven now. So if I see wick rejection, that means the next candle that comes up is going to be a very small candle, but it's going to move up to seek for more sellers. And sellers will be sitting more middle to modest or to modest. Let me give you also a formula. We have 145 beautiful people here. Do you only recommend having a higher modest lot size for small accounts, or do you do this all the time? Alyssa, I split my lot sizes every time I trade. Because I know for a fact, 9 out of 10, even me, a proven trader, I'm not always right. I'm not always right. I'm pretty accurate, but I'm not always right. And the minute you start understanding that and you get your ego out of the play because you feel like you should be winning, most people feel like I should be winning every time I press the button. No. This is the financial market. There's absolutely nothing that you have in your life right now that you can put into the market right now to really make it have an effect. So this is nothing that I say. This is not even my opinions. This is me analyzing the market from what the market shows me, what the market decides. I go with what the market's deciding. So when the market decides to break through a zone and start rejecting, I know for a fact that it will reject 9 out of 10 from the middle to modest before it rejects from your aggressive. When you get into open bail and you get snipers like Alex, that makes Alex even more like legit because his aggressives are so efficient. You understand that, beautiful people? Do you understand the sniping that this guy has in the eye to literally give you a zone, and 9 out of 10 his aggressive are popping off for like 2,000, 10,000 in 1 week, 13,000 something pips? So here we go. I always recommend split your lot size. So we're going to take this same scenario and I'm going to show you the benefits from taking middle to modest. So imagine now we have that same little entry. Boom. 0.05. Now the market is pulling in. The market pulls in. It just goes straight past your aggressive. You see a nice little green candle. So you're like waiting and waiting and waiting and waiting and waiting. So as it comes to your modest, soon as it hit my modest, my alarm start going off. Soon as I see that alarm, and then 9 out of 10, my alarm is always set a little bit before I want to enter. I want to enter up in here. So when my alarm gets set, I don't just run and press the button. I run, I see, I go, yo, we got some rejection coming right here. Boom. Once I get my rejection where the market is like doing some little push-ups like this, it starts hesitating on a 4-hour chart, start boop, 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 bang. I take that entry of the 0.05 right here. Boom, yeah. Now imagine if I'm taking it from here like a 2807 and the back of the zone is say a 2809, a 2809. Hold 1 second. I got somebody calling in the middle of class. Where you at, Jess? Get in class, woman. Watch this. I'm on live stream with 152 people in class right now on YouTube, and you didn't call me now. Now I got everybody listening to you. Your ass should be in class.
The funny thing is that my dog dialed your number.
Your dog dialed my number? Oh, shit.
Yeah. I'm like, oh my God, who are you calling?
He's like, we need to get Mr. H on the phone right now, mama. This shit is getting ridiculous over here. See, your dog even know you need to be in class.
Are you really in class now?
I'm in class right now. I'm telling you. I got like 154 people listening to this conversation right now and laughing.
Wonderful.
So get on YouTube right now, and I'll see you in class.
All right.
Bye. The dog like, get your ass up, girl. You know you need some money. Tell me you can't teach an old dog new tricks. What's happening? What's happening? So imagine now, when I'm doing middle to modest, that means I'm 10 pips into the 30 pip zone, or 15 pips into the 30 pip zone. So now I have 15 more pips, only 15 pips from here to there. You see that? So that means with only 15 pips, that means I'm only going to be negative $7 versus the $15 that I would be if I was in my aggressive. You see how it makes more sense now? So by the time it goes from middle to modest and I enter in and it pushes through my zone, I'm only negative like $7.50, $8 max. The minute I then put that 0.10, that 10 cents in my modest, and it drops 10 pips, it immediately puts me $2.50 in profit. As it starts flowing through, if I see a really good rejection from the modest, I don't close my middle to modest. I don't close it. I want 0.15 in the market. I got 0.10 at my modest. I got 0.05 at middle to modest. So watch this. Let me get this. So the minute it comes into here, boom, bankhead bounce. If I clear this zone, and I get a retest back at the aggressive, boom, it comes down here. I take my stop loss and I secure both trades. Modest. Actually, I would take my modest stop loss and move it to middle to modest. I would take my second stop loss, which is my middle to modest, and I would bring it to my aggressive. Just like that. Put some 8s in the chat if you understand what I just told you. If I have my very first entry in the trade, middle to modest, for a 0.05, and it hits the modest, I put in a 0.10, which is 10 cents. As the trade starts dropping, meaning a red candle is being produced, that's what I mean for the new people. A red candle is being produced. As it starts flowing back down, it's going to immediately kick me into profits because I'm only like $8 in drawdown, $7.50 in drawdown. A 0.10, 10 pips, meaning if it goes from 28.19 to 28.18, we are in profit at least $3, $2.60, $2.50. As it comes 30 pips back to our aggressive, you're up $30. With that 5, you have literally another $7. So you're almost up $37 to $38 from this play right here. The minute it clears the aggressive, close on the aggressive, retest the aggressive, and drops back towards our actual sales, our buy zone, that's when I start securing the actual trade. And once I secure the trade, I don't have to monitor it anymore. It is what it is. You understand that? My TPs are always, I don't do TP1, TP2, TP3. I personally don't trade like that. I trade for just the structure and the movement of the zones, of the candles. So when I see the candles up here, I go, yo, if the candles are pushing up to this zone, which is a valid zone, guys, this is a valid zone. And if it comes up here, she should start dropping down here. I'm not taking TP here. I'm not taking TP here. I want her to feel this whole area because you have to start learning how to feel these areas. And the best way to feel these areas is trail your stop loss. Just trail your stop loss. Bloop, 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 bloop. Consistently trail your stop loss, like how I did right here. As the market keeps pulling over here, I would take my modest stop loss and I would literally bring it. I would literally bring it all at aggressive and keep them right here. Boom. I've already secured 30 pips. I've already secured another literally 7.5 pips right now. So I'm at 37 pips going into 40 pips. Once it gets past this little zone, let me show you the zone. See this zone right here? Once it gets past this little zone right here, the market closes under these candles. That's when I can immediately take and say, you know what? Let's close the 0.5 out. There's no need to have two entries now. Now we have our modest stop loss right here at the top of this zone. Now it's not even in harm's way. I got 30 pips secured. And now the trade is moving down. 40 pips, 50 pips, 60 pips. If I want to take money, I take this and I say, yo, if this guy right here is a 0.10 and I'm up already 50, 60 bucks and I know my 3%, my 2% is like 15 bucks, 10 bucks, 8 bucks, 9 bucks, 6 bucks. Yo, take 0.2, take 0.3, leave a 0.7. Always cipher out of your actual target. So by the time it literally even flips back on you, you don't have the 0.10 still sitting here because you've already ciphered profits. So now this is more like a 0.7 now. I've taken 0.03 cents out of that trade. You see, which will give me literally like 13 bucks, 8 bucks, 9 bucks out of that 40 bucks. You see? You understand that? Put some fire in the chat if you're understanding those numbers. If I want specific rules for trailing stop loss, what would it be in pips? You can't look at it like it in pips because if you do it in pips, you're gonna put it in harm way. You gotta look at it in structure, and you gotta look at it in structure. So let me go to a different chart and let me just show you guys. Let's go to NAS. Let's go to NASDAQ right now. Let's go to NASDAQ right now. Let's clear. So watch this. If you have an entry right here, here's your entry. All right. We're gonna make that green. Buyout. That's a green buy entry. You have bought. Let's even make a zone so people can even understand what it is. Boom. Here's the zone. You bought at the middle to modest, right in here. Bink and bink for the same price. 0.5, 0.10. As it moves right over in here, watch this, and let's get your stop loss line already ready. As the trade matures and starts popping out and it closes outside, let's get it even bigger so everybody can see it. I want everybody to see this joint. Everybody should see it now. As it moves and closes outside of here, this is when you take your stop loss and put it literally at break even. The minute it closes outside the zone, you put it at break even because it can immediately come back and get it. But now this zone is protecting it. Your aggressive entry is protecting it. The minute this candle, see this little sideways movement right here? So for literally, this is 4 hours. So 4, 8, the 8th hour, it pushed up and closed out. The 12th hour, it gave you literally push. It pushed for you. When I see this push, Anthony, I take my stop loss. I go middle to modest. Boom. Now I'm up 15 pips. I have locked in 15 pips. I trade with standard. So by that time, I enter with a 0.25 from the middle to modest. I have a 0.75 at the actual modest. So my 0.75 up halfway, I'm literally up, I would say, almost $80. You see? Right now, with just securing $80. If it's here, that means I'm already up like literally like 225, 230. So that 0.75, if I'm already right here, it gives me this candle. This candle opens up and pushes up here. I go to aggressive. This candle opens up, drops back down. I feel like my stop loss is going to be hit. You remember the Indian giver we were talking about the other day? So that's the individual that will move their stop loss in the middle of a trade. Why would you do that? That is the most uneducated, immature trading characteristics one could possess, is removing a stop loss once you set it. The system still sees it. You've already added liquidity there. So it's going to come get your ass no matter what. You ain't running from the stop loss. But look at here, Ant. You got away. The minute I see this candle right here, closes over here, boop, opens up a new candle, that little candle pushes down. The minute I see this candle is green and going literally towards that 200. Now I take my stop loss and I put it at the bottom of the original candle that literally blasted off. So my stop loss is now here. I've already secured literally like pippage. So I'm from here to here, I've already secured pips. From 20,000, what is that, 864 to 20,999. That's almost like almost 1,300 pips. That's almost like 1,300 pips right there that I've secured. The minute I see this candle right here pierce this EMA 9 and EMA 200 and close on top, and then this candle retrace, I personally will see this gap and say, yo, she's finna go up. I move my stop loss to the top of this actual area right here. And the minute you do that, this is when the market said, oop, boop, came back, clip you out, and then took back off. If the market comes and clips you out, look at how much you have secured from here to here. So when people tell me, yo, I'm like, my stop loss get hit and I'm like losing, like how? How? Oh, when I jump into the trade, I don't want to put my stop loss too soon. Well, if you're not mature enough to understand how to enter a trade and manage a trade with no stop loss, hashtag team no stop loss, no income claims. You understand? Hashtag no stop loss. If I get bigger, Machiavelli, it don't look too good. It don't look too good. You see, it's like, this is like, I almost said something that's not safe for TV. You almost made me say something not safe for TV, Mac. So for an example, are you understanding that, Anthony? You guys understand? You guys understand how to move and trail that stop loss? And imagine if I have a 0.75 right here. Listen, that right here is shit. That's more than enough to secure your day. This from here to here is more than 20%, like more than 20%. I'm telling you straight up, on a NASDAQ, it's more than 20%. So the same thing I just taught you, you do the exact same thing for a sell zone or a buy zone. A buy zone. Put some 8s in the chat if you guys truly understand. I spent almost 40 minutes. I didn't even know it was 40 minutes, but you see how fast time flies by when you just choose to learn? Do you understand that, beautiful people? What I taught you today is the skill set to how to take a trading idea, no matter if you're in a Discord, no matter if you're just fishing on your own, or you're in a proper organization, which is the #1 trading organization on the globe, has the #1 traders on the actual planet. Hands down, hands down, hands down. Let me give you guys another little setup. Anytime you see the EMA 9 and the EMA 200 like close together and the market has a candle in between, this is like slingshot material. This is slingshot material right there. This trade right, this candle right here. This is slingshot material. Right there. That's slingshot material. 100%. I always say, let's go back to gold. Let's go back to gold, and then we're gonna talk plays. We're gonna talk plays. We're going to talk plays. Yes, delete. Boom. Let's talk plays, beautiful people. So, as I'm finna now start giving you a play to keep monitoring the market, you can immediately start seeing, if I go to my weekly chart, the market is in a full bull run right now. The market is in 1, 2, 3, 4, 5, 6 weeks of just green candles. That's a weekly, and it also made an all-time high. This is no longer our all-time high right now. The 2787 is no longer it. The new all-time high is sitting at 2829. That's your new all-time high for your week. Buyout. So that's my weekly roof. Boom. My weekly floor is still sitting down here at that triple bottom, the 1616. Angel numbers. Buyout. Bang, 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 bang. Yo, shout out to the reggae in the background. Is it not popping or what? Crystal, I told you, I got you. I got you. This class is for you and all of the new people. I've signed up 10 new people this month. Shout out to bringing in 10 beautiful people to the industry. I've signed up 10 beautiful people this month. Let's go. Let's go. We're attacking X6 and X12 right now. So now I have my weekly roof and I have my weekly floor. Now watch this, beautiful people. Now I want to be a day trader. So now I want to go to the day. When the daily roof is close to the weekly roof, I don't need a daily roof because that gives you your gap that's going to be on your 4 hours. But for new guys, you want to stay consistent. I'm still going to mark this daily candle. So what you want to do is take this daily candle and trap it. Boom, orange line for the day. Daily floor, daily roof. The reason why I do that is because you see these gaps. Put some ones in the chat. You see the gap right here. You see that gap, and then you see that gap right there. When I get to the 4 hour, this is a 24-hour candle. It has 9 hours and 15 minutes left inside this candle. The minute I get to the 4 hour, I personally trade from the 4 hour. I like trading from zone to zone. I don't like trading in the middle of zones. I like trading from zone to zone. So if I go 4 hour chart, this gives me my gap right here. You see that? There's your gap right there. There's your trade pushing towards that gap. It's at the market right now is sitting at a 28.20. That's a huge wick on the 4 hour. So the last thing I want to be doing is saying that buyers are no longer in charge. When I see where the market has been, or first thing first, you see where the market is at. Look at that candle. That is a bullish candle. It was once all red. She hit the EMA 9. She blast off. But there is showing you buyers are still in control because of this candle right here. Look at my wife. Look at my wife. Middle class. Middle of class. Middle of class. Get your ass off my trading view. Middle of class. It's 4:45 in the morning. My lady is upstairs looking at my trading view in a bed. I'm telling you, fellas, goals. With my high top bringing in the right energy to bring me back. That's right. These are goals, fellas. These are goals. So when I see this right here, to be honest with you, I'm going, yo, she's going to keep pulling up. Gold is going to keep pulling up. And if gold is going to keep pulling up, that means, guess what? Crypto is going down. And if crypto is going down, because yesterday, crypto went from 91,000 back to like 101, back down to like 99. So the whole market is literally like in shambles right now. So I always say be very, very careful with going into trades. Don't go against the trend in times like now. You have NFP week. Let's see if we have any news today. You got news at 10 o'clock. You have the job findings, job openings, and things like that, which is going to be, it should be good because of the new administration. So opening up opportunities, closing a lot of old opportunities that was corrupt. So this should be a really good sign for the market, which should for gold, meaning the US dollar. The US dollar should literally start getting like a little waiver. So that means if the US dollar gets pumped up from this news, gold is going to tank. That's what that means. That's what that means. So watch this. Let's go check the dollar real quick. Look at that. Look at that. So the dollar wants to break out of this zone right here. Y'all see it? She wants to finish the other side of the M. Look. She wants to finish this M right here. Boom. She wants to double top. Buy out. She wants to do the double top right here. So she's already came in, went down, and now she's consolidating in the middle of the M. You can draw that diamond structure right there. Remember I taught y'all about the diamond structure. You have a gap right here. Most of the markets are stuck in between gaps right now. And that's why the market really is not moving, but it's moving. Let me say that again. Most of the markets, even if I take you to NASDAQ, it's stuck in the gap. If you go into the bigger time frames, you're going to see it. You're going to see it like how it's just like stuck there. Let's go. Booyah. You see, there's another gap on the daily that it needs to fill. Let's go to your 1 hour. There it is. Here's your gap right here. Y'all see this gap? Here's your gap. Boom. The market is stuck in the gap. So at this point, I'm saying to myself, do I trade within the gap or do I allow the market to make a move, break outside the gap, retest the gap, we buy up right there? Do I allow it to break outside the gap, retest the gap, we sell right here? Put some 8s in the chat if you understand how when I say we don't need to make assumptions from here if the market is going to go through the gap or the market is going to go down the gap. So imagine if you say, oh, it's going to go up, and you're going to just buy right here, and then she comes over here, and now she's right back down close to your entry again. So now you're like, man, I was up $80 in the trade, and now fuck, man, I'm gonna only have to take like $10, man, because I put my stop loss in, and I already put my stop loss in profits. You see? So now you don't even give your chance. You don't even give yourself a true chance to really go because you're literally making assumptions. You're assuming it's gonna go. Your best bet is to allow it to go, retest, take the buy, and then boom, allow it to really flow and fill up all of this area here. You see? You have all of this area right here that can fill up. This is your money. This is where a lot of you guys get inconsistent and you start taking early trades, or you get into a buy and you close it because it needs to work itself out of this actual gap. And you can't handle working outside the gap. If you choose to jump in a trade with risky waters, don't jump out because it gets bumpy. You shouldn't have never got in at this point. Allow it to push out, retest, because 80% of trading is watching. 10% of trading is buying. The other 10% of trading is selling. Literally right here. Y'all put some 8s in the chat if y'all understand that. So let me give y'all some money. Let's find some money before we get up out of here. Let's find some money. Let's find money. Let's go to your 4 hour. Yeah, she pushing. She pushing. She pushing. She pushing. So I'm going to take away the daily roof. And we'll once again, you should start seeing. I don't even want to give a sale right now. I don't even want to give sales right now. I'm not even going to give you guys a sale. I'm going to give you guys a buy. I'm going to give you guys a buy. Let's go. 813. Let's do 813 to 810. Boom. Yeah. Let's do 813 to 810. 2813, 2810 will be your buy zone. Your aggressive, 2813. Your modest is 2810. I have a alarm set at 2811. Boom. So what I want to see, all I want to see is, I want to see the market drop back down like 60, 70 pips. I don't want to project that from here because there's too many buyers. So I don't want to assume, I don't have enough data besides this right here to say, yo, we're going to sell right here. It's not enough data. I have to at least see 2-3 consecutive areas where it's dropping to give you guys a sell zone here. From here, I'll just be guessing and saying, yo, if it comes to this area, 830 to 827, take the sell because that's what it did last time. You can't say that. It could do it easily. But I prefer to give you guys a buy, which is basically a safer play in a chaotic time right now in the beginning of the month. So there's your buy zone. 28.13 to 28.10. 28.13 to 28.10. And you can run that back up to 28.30. Understand that. That's more than 150, 160 pips. 150, 160 pips on a one lot size, that gives you like $1,600. That gives you gives you $1,500 if you take it, if you trade it right. If you put a 0.25, do your math. Do your math. Do your math, beautiful people. Let's go. Let's go. Let's go. We're not gonna project at the all-time high. Last time we projected the all-time high right over here, she came over here. And then she finally dropped. Look at this shit. She finally dropped. So everybody that was like selling her right here, we couldn't even handle when she came all the way up to like 816, 817. I think me and Keith had a 828.18 estimation. She came to 28.17 and dropped. Yeah, so if you look out down here on these smaller time frames, yeah, so she's blasting off. So you want news to come in and kind of like allow her to retest, and then you take this right here, like this. From the coaching you just had today, middle to modest, or you can take aggressive, start small, make sure you hit it for a different, and imagine you can do like this. If you have a very small account and you only want to do 0.10, hit her with a 0.2 and then hit her with a 0.8. You see? Or if you want to use 10 and you use 3 entries, hit her with a 0.2 at the aggressive, middle to modest, hit her with a 0.03. That's 5. That's 5. When she gets to modest, you hit her with the whole 5. You see? Now you got 10 in the market, but 3 entries. So that means 3 trades that you're going to have to manage. That means 3 stop loss you're going to have to trail. So that's what that means, beautiful people. Why are they going to give me this long ass? Get out of here. Put some 8s in the chat if you're understanding. Put some 8s in the chat. Put some 8s in the chat if this class answered a lot of questions that you struggle with. Now you guys start understanding that you can literally jump into a trade, take the signals. We have a 90% win ratio in our signals chat. We give out in a week, far as pippage, what most professional Wall Street, like straight up stock exchange, do not give in a month. Let me say that again. We give out more pips in a week than most professional banking trading organizations, Wall Street professional certified traders give out in a month. When I talk to some of the guys that I know that are professional traders, that are professional financial advisors, and I show them our pip count, they're like, bro, this is not even real. This is not even possible. You guys should be funded by millions and millions and millions of hedge fund money right now if this is what you guys are doing. I said, the problem is when we take hedge fund money, you people expect us to dance for you. And we dance for no one. We dance for nobody, beautiful people. We dance for nobody. Nobody does it better. Oh man, I want to give a sale so bad, but I'm just not sure with it. And I never like giving trades that I'm not sure of because of such bullish momentum from the week. You know what I mean? Look at this bullish momentum from the week. So what I want to say is what I'm projecting right now is literally saying that this little candle can pull back down up in here and then news come back and just blast her back off. Blast her back off. This is what we're projecting. And if she dies on us, she dies on us. It's just that simple. But I doubt she dies today. I doubt she died today. That's for sure. So listen, I love you guys. Y'all like, share, drop some comments. Make sure you literally like the live before you leave. If you have not turned the notification on, if you have not subscribed to the channel, you tripping. You tripping. If you have not left a comment on the last class that I gave yesterday, you tripping. Because yesterday was a great class. Because if you would have just listened and stayed in class to the end, you would have heard me say we flipped that sell zone to a buy zone, and where I lost $70 in everybody's face on a sell zone, we flipped it right back around on a buy zone and got almost $170 out of that with a small lot size on a small ass account. I'm telling you, it was golden. It was golden. And this is last 3 minutes. Hell, let's go. Let's go show y'all. Let's go show you yesterday's video. Let's go show you yesterday's video. Let's do like that. Boop. No, let's go to lives. What was yesterday's? How to recognize. Nope. Yesterday's video. Boom, let's play it. Let's see if we can play it while doing all of the other stuff. Or maybe we got to play it. Oh, here it is. We'll play it from here. I'm going to go all the way to the end. Watch this. Time high down. That's how that works. So I don't take another shot here. I take another shot back into the zone going the other way. Put some 8s in the chat if you understand that. Listen to it. Put some 8s in the chat if you understand that. This immediately goes from this to this. Fire sauce. Listen. That's how that works. She can pull back and do just like this. Boop. Boop. And then you have another zone from 8:17 to 8:14. That will be your next zone that she'll play. 8:16 to 8:19 actually. Like that. You can play that next little zone. This gap right here. That will be your next area of play. Y'all see that? Now watch this. Let's go back to the 4 hour. And let's go to, where was that? 28:11, right there. I think we was even on the 15 minutes. And then we're gonna get up out of here. 28:11, right up in here. Yeah. There's your retest right there. That was your retest back into the zone. Shabinka. Blackout. Well, actually, even thinking it was even, no, because this is too close. She was, where's yesterday? Yeah, this is it right here. This is it right there. So I love you guys. Like I said, sell zones can go to buy zones can get flipped to sell zones. It's just a matter of you understanding that even though you don't make money out of the zone, that does not mean the zone is not valid. The zone is valid for another projection. Meaning if you're trying to sell in a zone that literally gets blasted through, that means buyers are still in play. So if it retests that zone that it just broke through, that's a buy zone now, not a sell zone. Vice versa if you into a sell zone versus buy zones. I love you guys. Y'all make the rest of your day the best of your day. I'm finna go get my sweat on in the gym. Deuces, beautiful people. Make sure you tag me. Make sure you drop screenshots. Make sure you put me on your social media. Let everybody know that we're learning and earning over here. Learning and earning over here, beautiful people. Like, this is the game. And as long as you're staying in the game, you have to be willing to put up the fight. And anytime you over leverage, you're not willing to stay in the fight. That means you're throwing one haymaker and hoping that it lands and knocks your opponent out. But what happens when you throw that haymaker, it lands and then the opponent smiles. I've taken your best shot, now what you got? So you can't go into the market like that. You have to go into the market saying, yo, I'm ready to do all 12 rounds. I'm ready to be in this trade because I believe in what I see and I have the patience to see it through. I love you guys. Y'all make the rest of your day the best of your day, beautiful people. Deuces.